The informality of this sector and the ease with which ASGM can occur just makes it inherently vulnerable to risks. So how do you actually do responsible sourcing? Well, from our perspective, we like to ask the private sector to really just ask questions about your supply chain. And maybe more importantly, be ready to answer them too from different, from both your consumers and from your suppliers. For a more systematic guide on how to source responsibly, the US government supports private sector adoption of the OECD due diligence guidance for responsible supply chains of minerals from conflict-affected and high-risk areas.
And money burdens continue to expand from the central banks. Sure enough, we did. Keep in mind, it took only 8 days after that to when the Fed had to shift on March 23rd to unlimited quantitative easing, which I might add is also the 2-day period where the EFP function in the gold market broke and a couple market makers were blown out. HSBC reported a $200 million loss. CIBC reported $60 million loss. And I would suggest there was probably a bunch more losses behind that have not been publicly reported on.
Interesting on the central banks. World central banks went on a gold buying spree. Now I talked to Jeff Christian, who's the head of the CPM group in New York, and we're in frequent touch. And I asked him why there wasn't more buying. There wasn't more buying by central banks of gold. He says they buy over the last 30 years. Central banks have been trying to supplant their U.S. dollar stores with gold, but unfortunately, because of the liquidity of gold, to service their current accounts and their ledgers, they need the liquidity of the dollar. However, I will also speak to Chris's point, which he made several times, which I believe is true, that the debt that they've piled, that central banks have piled on, not through their own fault, some of them through bank failures in the mid 2000s, 2008, but also through this COVID, has weakened the dollar. And if one of the reasons they can't increase interest rates is with that level of debt, servicing the interest on the amount of money that they've printed is not possible. It would fail. So I see those interest rates staying down for a long time unless there's some kind of global movement like we saw in the beginning of the millennium, when China and the BRIC countries were pushing world economics, and you had high interest rates and high economic growth. That could bring the dollar back, but in the shape that it's in right now and the level of debt they have, moving interest rates up would cause them to basically, in my opinion, fail on their payments.
So what you need to understand is, and let's go back to this chart quickly. Basically, this low here in August 2018 at 1160, that's where the wave started that took gold to the all-time high. And in this wave, we want to zoom in now. So this is the start in August 2018, 1160 was the low. And this is the top, the recent top in August at $2,075 an ounce. And you can see basically it's a rather smooth ride higher, only interrupted by this Corona meltdown, where basically all markets crashed and gold went from 1700 to 1450 within a few days, but also rather quickly recovered most of the losses, and then started this bull run in the summer. So
Ian.
Yeah, so I mean, we see it as problematic for a number of reasons, and I think the effect of COVID. I mean, obviously, yes, it can, like the instability and insecurity that comes from that, and kind of investment in gold as a safe haven, obviously can increase the price, and that leads it to being a better source of revenue for what we consider threats to national security, right? it also creates an incentive for artisanal miners to mine more, and for more people that lose their usual livelihood because of COVID-19. So say they're working as builders or teachers, or they're just students in school. When those close down, when sectors of the economy close down, legal sectors, the people are just incentivized to go out and mine gold illegally, where you don't need a large capital investment in most cases, and you can just go out there with a sift, a shovel, and ordering or buying some mercury. So that's obviously a big concern from our standpoint. And then, I mean, gold gets used for money laundering, for sanctions evasion, all of that. It just becomes a more powerful tool for those activities when the price is higher, and it just becomes easier to leverage. With silver, I'm a little less concerned, just because the volume needed to kind of transfer the same type of value is different. Even with a 100% increase in the price of silver, you're still basically, I mean, a lot of this just gets transported on commercial flights, right? So you'd still have to lug around a lot of silver to really pose a significant threat. That said, I mean, I think in the artisanal mining sector, it's still an increase in the price can lead to more of these risks occurring, more children going to mine sites, more mercury use in particular, since I understand that that is also used in the processing for silver. But yeah, that's my piece on it.
Yeah, people focus on the gold silver ratio. I don't. I know the gold silver ratio really is a function of the volatility of the pricing of the commodity of silver, to be honest. Does it affect a second wave of COVID? Will it affect the silver price on the industrial side? I think we saw a lot of supply chain disruptions in that. You can see it on every chart that you look at, that big V that Florian showed. It's on every chart, and supply chain disruptions were massive during that period. And yes, it did affected silver somewhat. But silver, as I think I said it in my slideshow, it is actually not in a deficit. It's actually in an oversupply situation. Last year it was. So the industrial aspect of silver doesn't seem to control the price as much as one would think. It's tandem tied to gold that actually has more effect on silver than the industrial aspect. Although it's used extensively in industry, the market looks at it as a sister to gold, and it moves that needle, as you just said, on the ratio basis. And the ratio basis has expanded, as you just said, from 85 to 1 until about 5 years ago, until 4 years ago, until up to as high as 125 to 1, where it is currently. So it's hard to ascribe the movement of the silver price to the industrial side. In my estimation, its value is tied very closely. Its market value is tied very closely to the movement of gold.
I appreciate it, Gordon. Chris, what is your take on that?
Yeah, well, I agree with what Gordon said, and thank you for mentioning that, the correlation between gold and silver. And it's interesting because if they are correlated, and therefore we're going to look at silver as some component of money, and again, when you go back to like maybe even taking a step back of what should any of this stuff be worth, keep in mind that at least for a long period of time, the country was founded on $1 was worth X amount of gold. So this idea when Bernanke comes along and says, you know, despite that, he's doing unprecedented measures with the world's reserve currency that I think anybody who studied economics could see were pretty reckless. You know, if we take a step back, you know, and they make it anyone who talks about gold is just, you know, some sort of conspiracy theory, but that's what the definition was until Nixon, that, you know, with all due respect to the man, I don't think that decision was done for the good of the people when he blames that on the speculators. So if we're saying where should some real relative value of gold be, the Fed doesn't even print M3 anymore, but I mean, it's been years since I've done the exercise, but any figures I've ever seen, I mean, gold relative to the money supply, let alone the increase in the money supply now, it's staggering. And, you know, again, with these ratios, I follow it. All right, well, a couple months ago it was 125 plus, then it went down to 70 something. I guess today it's in the 80s. So perhaps what this points out is that, yes, they're what the fundamentals say. And I think if you can be patient and let those work to your advantage, especially in a society which is the opposite of patience. So when you just think about an equilibrium of a market, everybody's impatient running around here, and you can just sit there, similar to what you saw in The Big Short. Yeah, you can capture these things, but you don't know exactly when it's going to happen. This is the psychology of the market impact. And I mean, I could sit here for days saying, well, there's this reason and that reason they're going to print, or that I mean, keep in mind when COVID came, I saw figures of over 50% of the world's silver supply went offline. And the demand, I have a partnership with a bullion dealer that comes on my show. And the guy they've never had this many phone calls. Everybody was buying metal. I checked in with him before the panel today. The person who interacts with him, she said it's 20 to 1 in terms of the orders she's received of people they're buying, even this week when the price is down. So, I mean, it's depends on what somebody wants to do. You know, if you're trading gold and silver and saying what's going to happen next month, then yeah, that's a different picture.
I didn't understand the question completely. What it's like, how they relate to each other, or how they will coexist?
What's going to happen going forward between the two currencies? Because as I look at it, has a major influence on the US dollar, and other currencies around the currencies get involved with the blockchain process and all the rest of the things that are happening globally to create universal transparency. So gold's in this picture as well as the cryptocurrencies that are being created by the federal banks and individual companies that are going forward. My question is more, or I'm interested in, how are these things going to interact and affect each other?
Well, I mean, that's a big topic where we can spend the full evening, I guess. But first of all, gold and Bitcoin are not related at all. I think I'm the only one so far who's publishing a ratio, the Bitcoin gold ratio chart, where you can basically see how is gold behaving in Bitcoins and how is Bitcoin behaving in gold ounces, which I personally think is very interesting for similar reasons why we talked about the gold silver ratio, for example, and also why it's interesting to look at the gold Dow Jones ratio, for example, to see how is gold behaving against the stock market and the stock market against gold. But Bitcoin is a world on its own, and Bitcoin is not necessarily blockchain. I mean, I think Bitcoin has various features that makes it superior to gold, and there's also features that are probably not as good as gold. At the end of the day, nobody really knows how this all will work out. What I know is, and what I can tell you, for the last 10 years, Bitcoin has been outperforming everything else on this planet, has been the best investment. So far, it's unstoppable. Governments slowly but surely realizing that, they will try to prohibit it. they won't be able to stop it because it's the first decentralized asset on this planet. So the critical threshold that Bitcoin needed to achieve has been achieved a few years ago. Now it's decentralized. There are so many computers and masternodes and networks running on this planet at the same time. Nobody's able to shut them down or bribe them or bring up enough money to change the whole blockchain that is basically constantly writing down the transaction in the Bitcoin network. So I think Bitcoin will introduce something, or is already introducing something, a new concept which is called digital scarcity. So gold and silver used to be physical scarcity, and Bitcoin is introducing digital scarcity. You cannot create Bitcoin just because you want to create them or by pushing a mouse button or anything. You need to prove it to the network, which is decentralized, that you have the right to create this or move this Bitcoin, that you really own this Bitcoin. And if Bitcoin should proceed and prevail, and I think it will very likely, well, as you said, this will bring mankind in a completely different world of transparency at some point, because I could, if I would know that this wallet is the wallet from Chris, I could look at all his transactions in this wallet. Actually, you can look at all the transactions in the wallets. You just don't have the name to it, and I could have 500 different wallets. So it makes it a lot of work to really track and trace what I personally do, but at the same time, it's super transparent. And it's a very exciting new concept for the last 10 years. It has basically, yeah, I believe it's basically built upon the decentralization of information that brought the internet. Now we have a second quantum leap, which is bringing the decentralization of power, control, and therefore money. However, we are still far away from the fact that Bitcoin could take over. Who knows if it will? If governments continue to create currencies constantly and devaluating everything that we do on a daily basis, it could be that the system at some point will somehow implode.